You are listening to chartingwealth.com for Friday, the 17th of June, 2016. We are re-recording this broadcast because I did what I thought was the whole thing, then went back to edit it and realized that I stopped at the Qs of the NASDAQ 100. I never did gold, so we're going to start over again because we care. We want to make sure you have everything you need, everything we promise to do every day. What do we see going on in the market? We have three red down candles on our Hikinashi type candlesticks on the total market represented by IYY. That is the iShares Dow Jones US Total Market Index Fund and Exchange Traded Fund. Derivative oscillator rotated onto the negative on the new candle that started forming the first day of the 2 days. It'll end up finishing off on Friday the 17th. So the first half, those three down candles, instead of representing 6 days, actually represent 5 at this point. Still well below the 2-day trend line, rotated over back on the 15th. What do we see going on the 4-hour chart, the half-day chart? Well, we see that if you followed, and again, we're trying to track this every time to see just how good our Hikinashi candlesticks are, showing us backups prior to having to wait on a backup on the MACD on the 4-hour chart. Had a nice little backup in the morning of the 15th, indecision the afternoon of the 15th, and then we had, of course, the down candle in the morning. We're going to see how well that pays off if you had gotten in the afternoon of the 15th to jump into a move going down, paralleling what's going on the 2-day chart. Now we see on our 4-hour chart, derivative oscillators losing some of its downward momentum. MACD is coming closer to the red signal line. We don't have anywhere near a crossover at this point, but that is interesting to note. See if there's going to be a backup, then a further downward movement that might give those of you who want to play it safely an opportunity to get into a virtual downward trade on the total market. Again, total market up 0.05% for the day. We're going to go back to our 2-day chart, take a quick look at the S&P 500. It was up several times more than the total market. Today it was up, again, just 0.32%, but it was up, still below the 2-day trend line. Derivative oscillator, nonetheless, did rotate over negative. And if we look at the 4-hour chart, it looks somewhat similar to the total market. It is down, losing some of its downward momentum, again, like the total market did on the derivative oscillator. And the MACD is getting closer to, but not close yet, to the signal line. So again, we had some upward movement on the morning of the 15th on that S&P 500 that may have given you the ability, if you wanted to use as a backup indicator so you could get into a downward trade, that green open box candle in the morning on the 15th. Now let's go back to our 2-day chart after looking at the 4-hour, and we're going to go over to the Qs. What was the Qs up? Well, it was up 0.29% for the day. Again, three nice connected down candles, red closed box with nice wicks on the bottom, crossed over going down back on the 15th. Derivative oscillator clicked over throughout the course of the forming of the new candle on the 16th. And if we look at our 4-hour chart, what do we see? Well, we see, of course, an uptick in the morning on the 15th. And then we see derivative oscillator flipping over, going down on the afternoon of the 15th, morning of the 16th. And again, technically, the Qs, NASDAQ 100 is what it represents, up 0.29% for the day, still below the 2-day trend line. We'll see if the downward movement resumes on Friday. Now let's look at the 2-day chart again. We're going to go to gold, which was down 1.04%. We can see from the 2-day chart, gold is continuing its up movement, have 4 candles actually connected going up. Gold crossed over going up on the 13th. About the same time, derivative oscillator crossed over going up. Gold has continued to move up on the 2-day chart, even though it was down over 1% for the day. We look at the 4-hour chart. What do we see? Upward momentum in the morning, followed by down movement in the afternoon. See if indeed the 4-hour chart backs up, that is, crosses over moving down, and perhaps then will revert back to an upward movement that would give you an opportunity to jump in at that point. Derivative oscillator lost a lot of energy throughout the course of the afternoon, and the MACD and the red signal line getting ever closer together. That is where we ended the markets on Thursday. As we go into Friday the 17th of June, we have posted a couple of interesting things throughout the course of the day. Some new training. We're focusing more on getting that out to you in addition to our daily postings of what's going on in the markets, because we want you to understand more and more what it is we talk about, what we do. If you don't already subscribe to our daily podcast, please do that, because we will send out to you with that a link to how to read a stock chart video and to the layout that we use at freestockcharts.com. That is our number one most downloaded things are, well, 1 and 2 are the how to read a stock chart video and the link to freestockcharts.com, so you can download the type of layout that we use. We keep it simple. If you go to our website under training, you will see all the different trainings we have that explain in many different ways what we think about the market, why we keep it so simple. You know, you can look at these charts and cannot possibly figure out what some folks are looking at when things are so complicated. We really hold to the rule Occam's razor. We keep things as simple as possible, as Einstein said, but not simpler. As simple as possible, but not simpler. The real genius is breaking it down into the most simple thing you can to still get the valuable results. And that's what we try to do. Practice with us every day. Spend just a few minutes with us every single day the market is open, and you will start learning how this works, and you will get better and better at doing this, because I'm telling you, one of the most important things you can do to protect yourself in the future, in the present, is going to be making sure that you understand how to read a stock chart, that you know what's going on in the markets, that you can look at a big chart, a small chart, you can figure out what's happening and make the right financial decisions for yourself, for your family, for your wealth. We appreciate you. We love to hear from you. Chartingwealth.com. Follow us on Facebook, Twitter, Instagram, YouTube. Go to iTunes. Give us a 5-star rating if you appreciate what we do. You can even subscribe to the podcast there, the audio. We also have a separate video podcast. Once a week, we put our weekly review and forecast. You can subscribe to that too and give us another 5-star rating. Say something nice about us. Lastly, one last request. YouTube. If we can get 1,000 subscribers to our YouTube channel, we're already well over 500 thanks to you. Once we hit 1,000, we can start doing proprietary video casts. If you'll help us get to 1,000, we would really, really appreciate that. Thousands listen to us every day on iTunes. We have hundreds or 1,000 plus listen to us every day on YouTube. But we really need those subscribers on both iTunes and YouTube. But once we hit that 1,000 at YouTube, we'll start being able to do proprietary broadcasts for you. So thank you so much. We'd love to hear from you. Go to Charting Wealth. Tell us what else you need. We'll be there for you at chartingwealth.com.